Hello everyone, and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to Motor Trade Radio. We're joined today by Jeremy Yea, Senior Valuations Editor at CAP HPI, for our regular end of the month review of trade value. So welcome back to the podcast, Jeremy, on what must have been a busy few days for you writing the latest editorial.
Absolutely. Yeah, thanks for having me back, and good morning. Been a busy few days as ever. Darren's on holiday, so step in as the summer substitute to write the editorial and obviously cover this off with you guys.
Yeah, well, as ever, it's a cracking read.
Thank you. Appreciate that.
Off the side bench in the summer period.
Every time.
It's one of them, isn't it? Yeah, I can. I mean, like I say, there's I think, for you, just generally, I think there's a lot going on within the sector at the minute, with all the political and economic climate and the changes with the new government and everything else that, from your perspective, trying to keep an eye on that and how that starts to play into the used vehicle market will be one that you're probably trying to keep your eye on at the same time.
Oh yeah, 100%. I mean, I think we've always said that, anything to do with general elections or any like major sporting events doesn't overly affect the market, and I think that's more or less proved this time around as well. So yeah, keeping a close eye on everything at the minute. You got to have eyes everywhere.
Probably affects you sat watching the final more than anything else, there, Jeremy.
Yeah, head in hands. Yeah, a lot of hurt again, but we're used to it. We're England fans and we're used to it. So
yeah.
No worries. Well, let's get on. So, as usual, do you want to talk us through the sort of headlines? We normally start off talking about the high level 3-year 60 mark that was down minus 0.4%, which I think is a circa about £70. And talk us through, the detail behind some of that and how it compares with both recent months and previous years at the same point.
Yeah, so as you just alluded to, then you just it's a 0.4% down, which is marginal. It's actually a really quite strong month again. That's on top of a strong month last month, which was a 0.1% drop, and that was 1% stronger than normal seasonality or average seasonality if you take out the COVID years. And this year and this month again has been very, very similar. The start of the month actually started probably a little bit stronger than it ended. We were at 0.1 for probably the first couple of weeks, if not a little bit more. Then it was only in the last sort of 10 days or so it started just to come back edge, but ever so slightly, just a little bit more than expected. But with the averages 1.1% down of July into August book, then I think that's a strong result. It's a strong result overall. I mean, there's lots of variation with underneath that, and that's the highlight of detail that we go to, and there's an awful lot of work we do. But overall, it still looks like a very, very stable market and steady as it goes.
And that takes us to a year to date, I think, of minus 4.5%, which is slightly stronger than the same period last year. I think it was down minus 5.4%. So, and you alluded to it there that, we always talk about the monthly figure, but as you said there, you look at it daily, because within your CAP live figures. So you're saying that, it just started, it was fairly firm, and then it just started to just ease off. Was that driven by anything in particular, or it just got that little bit weaker as we got through the month?
I think things just sort of eased a little bit, and that's not across every sector, to be fair. We just saw, I think if there's, any large duplications and the market's not full of cars in the minute, but we just saw sort of a little bit of a tailing off. And I guess, there are holidays which are staggered across the country, and Scotland's been off for what, a good 2 or 3, maybe even 4 weeks now, maybe a month. So the way the impact, it sort of impacts the UK in different ways as the school holidays sort of kick in, and there'll be plenty of people, with the holidays now in full flow, then it was sort of expected in some ways. But like I said, even an extra 0.3 drop in the last sort of, week, sort of 10 days or more isn't untoward. It really isn't. It's just a very slight cooling of where it was before. And I think last month it's down 0.1. I think it didn't move from the middle of May, and I think it only moved down another 0.1 from the middle of May. So, there's been a continued quite a long period of weeks and weeks of strength, and it just sort of eased back now, which again, it's not untoward and probably is a little bit expected.
And Jeremy, looking at some of the detail within the editorial, can you take us through some of the pricing trends you tracked across the various age bands this month?
Yeah. 1 year 10K, that went down 0.6, again, which is, marginal, which is about £190 overall. So again, very, very marginal and under what would be a normal monthly average. A 5 year 80K, that went down the same of 0.6. It's when you get to the older vehicles, I think, where there's obviously a huge mix of maybe condition and mechanical challenges and other things to affect provenance, etc. That dropped 1.6% overall. So, but again, that's not off a cliff. I think there is some variation within that data as well. Some of them have recovered slightly. Some of them have dropped even further. I think high mileage cars are probably one of the hardest hit at the minute. But, overall, it's all more or less in line with each other and within expectation.
And before we look in detail at fuel, how did the various vehicle sectors perform?
Well, I'll start with the weakest. The weakest was lower medium, or the mainstream sectors. Anyway, Coupe Cabriolet went down 1.2% overall, which is a bit of a dying sector anyway. But yeah, down 1.2. Lower medium went down 0.9, and that's roughly about 120 quid, give or take. So not anything untoward there. Then we've got City Car and Super Mini. They dropped 0.6, so in line with each other. An upper medium, which is your A4 and 5 Series and what have you, that dropped down 0.5. So it's SUVs, which I think stands out. It's probably one of the I guess strongest performing sectors. Bearing in mind that makes up pretty much 60%, I would say, of our data up to 3 years, and that dropped only to 0.3%. So that's a really, really strong month for what is the largest sector, and SUVs have, I guess, taken over the world, haven't they? So plenty of data there, plenty to look at. But yeah, a real eye opener, I guess, in terms of falling just behind the overall average for the month.
And as Curtis alluded to there, thinking about the fuel types, you mentioned there, there's the fuel type will be playing into some of the broader sector performance as well. So what's been happening in fuel type? Because we've seen, the ICE vehicle shortage, weakness over the months and years of EV. What's starting to play out now?
Well, I think ICE continues to be probably the most desired within the market, but which is not surprising given that I think EV uptake has been relatively slow from a new car point. It is picking up in the used arena now, as we know. Diesel dropped 0.2%, so that's negligible really. That had been dropping further than petrol and hybrid over previous months, so maybe that's just starting to just look at really good value for for some buyers, for some retail buyers. And looking at petrol's down 0.4, which is in line with hybrid as well, down at 0.4. Plug-in hybrids down 0.6. EVs dropped the most again, so it is the fastest or the hardest fall in for the month. But that is the strongest EV movement we've seen for at least this year, if not a little bit before. So that's really quite a big headline, I would say. It's a really positive thing for EVs at the minute. There are green shoots out there in terms of people who are buying and selling and dealing in them. But yeah, to only receive a 1% move down can be seen as very positive.
No, exactly. When you're up against a previous marketplace that would be similar to that anyway.
Yeah.
In terms of seasonal movement. But I mean, we always talk about notable movements, and I mean, was there anything notable in terms of up or down in some of the petrol and diesel? And as important, I think last time me and you spoke, you highlighted that Mini had gone up for EVs in the month that we last caught up. Have you got any sort of notable movers within those fuel types by make and model?
Yeah, sure. So I'll start with the non-BEV or the ICE models, or the non-BEVs. 308 hybrid, that went down 5.9%, about £900. So that's on a little bit of a journey, I guess, to reach some price relativity to some other vehicles in the market. XE diesel, that was down over 5%. Cougar hybrid, that was down nearly 3% or £480. Q3, that was down a couple of percent of just over £400. But then on the other hand, we have seen some increases as well. So Range Rover Sport hybrid, that's up 3%. That's gone down consistently in previous months, but seems to have found its level and some desirability within the market. X4 diesel went up 4%. Qashqai diesel, that was up 3%. And RAV4 hybrid, that went up a couple of percent as well. And there's plenty of cars which are level within that as well. Again, some good ICE models and some, I guess some higher volume models, but still just not going down. They're really desired within the market. If I look at the BEV stuff in isolation now, some actually went up. Polestar 2, that went up just over a couple of percent. Tesla Model X, that went up a couple of percent. E-Niro, that went up a couple of percent as well. There's a good few models which remain level as well. Cupra Born, Model Y, ID3. But there are some vehicles, battery electric vehicles, which have gone down. VW up, E up, I should say, that's down 5%. That's about £400. Smart 4.2, that went down nearly 5%, again £340. And the C40 electric, that went down about £900 as well, just over 4%. So there is variation within everything we're seeing, in every fuel type. So like I said earlier, I think the ones in the BEV world, the ones which have been, I guess, on a journey previously, they've sort of found some levels, I guess, in price parity, or even, they sit comfortably behind some petrol and diesel and possibly plug-in hybrid models as well. And you've got other ones which are still on a journey. They're fairly relatively new to the market and still finding their place against their peers.
You're listening to All the Chatter That Matters on a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
And Jeremy, just staying briefly with BEVs, in the latest editorial, you make some interesting observations about some of the stocking trends among independent dealers in terms of the overall proportion of BEVs that they stock compared with franchise dealers and car supermarkets. What's your take on this? What do you think that suggests?
Well, after going through our internal retail database, we've been looking a lot in retail recently. And I know in May we highlighted that there was a severe lack of independent dealers, especially, along with franchise dealers and supermarkets who have not stocked or sold an EV within the last 6 months. So, and unfortunately, the picture hasn't really changed from May into this month, or what we've looked at through this month. So only 17% of independent dealers had actually advertised the BEV in the last 6 months, and that remains unchanged, which is crazy considering some of the opportunities, profit opportunities, and maybe some areas of the market which are looking to retail market which are looking to finally make that jump into a BEV vehicle. Supermarkets and franchise dealers, only 46% of supermarkets have been stocking in the last 6 months, along with 45% of franchise dealers, which I find, which seems crazy. But the ones who are, I guess, happily trading away in it and making good profits and quite happy to keep on going.
Yeah, there's some interesting stats there, Jeremy, because as you say, you would expect certainly franchise dealers to be higher, but on the independent side, I'm guessing that's probably just residual nervousness about stocking EVs because of those price drops that we saw certainly over the course of last year.
Yeah, you can understand there is some reluctance, and I guess once bitten, twice shy in some cases. But some of them have dropped so far now. And I think some of the models we've seen since, I think it's September 22, dropped like nearly 60% in value. So there is some real good value in EVs at the minute. And I think, if the selling journey is right from the dealer to the customer, then, I think if you can sell the benefits of not just the price of the vehicle, but the total cost of ownership and, when you charge from home, if possible, I understand that everybody can't do that. But there really is, I guess, a a large opportunity, and electric vehicles aren't going away. There's plenty more of them coming back, so it would be probably a good time to get involved and maybe start learning about electric vehicles and trying to sell them. There are sweet spots, I guess, within it. Sort of sub £20,000 would probably be the area of it. And there's lots of vehicles now which fit within that under £20,000, which look extremely good value.
Yeah, I mean, your points you've made for the last few months now of stabilisation after those significant moves, and now starting to, as you pointed out earlier, seeing those increases now in some of the models shows that there is a market there, and some of them do look very good value for the amount of car that you're getting for the money. So yeah, I think you have the savvy dealers that pick up on that, don't you? That know that how good a value there is in some of these vehicles if you can just find that customer. So no, I agree with that. And I mean, every month, just moving on to wholesale and thinking about what's been happening in the auction houses in the wholesale trade arena. I mean, what's the view and what's the poll look like in terms of that stocking levels and demand that you're seeing in terms of reporting back to you now?
So stocking levels are, they're looking, well, this month compared to June anyway, they're almost on par, I would say roughly about the same, but there are more auction houses reporting that, volumes are decreasing. Hardly surprising in the run up to April and the run up to September for the new plate change. So, that has kept, I guess, buyer interest and continued desire, I think, just to carry on and buy. So, that's a really good barometer, I think, of where the market's been and how it's just, I guess, changed from June into July. But, it just feels like in some ways, a normal run up to the plate change month, where stock levels, tend to drop off across the auction network anyway. In terms of demand, I mean, it was a bit more split last month in June. There was almost a third of increased, decreased, and roughly about the same from the auction houses that we surveyed. Interestingly, this month 86% said it was the same in terms of demand, which is really positive, and actually 14% said it's actually been increasing. So that really, I guess, highlights the underlying strength within the market, and again, trade buyer desire to buy stock to fill forecourts, to fill spaces of cars they've sold.
And Jeremy, before we look at August, I did notice in the editorial this month you did a lot more on retail trends. So I'm just wondering what you found, what actually stood out for you in terms of the retail trends analysis you saw over the course of July.
So we looked at days to sell over the last month, and I think overall it remains pretty much unchanged for vehicles up to 10 years old. They're roughly all in line with each other, and there's no deterioration with that. If anything's getting a little bit stronger. We looked at some of the fuel types up to 10 years old. So hybrid sales about 39 days, battery electric vehicles and plug-in hybrids at 40 days on average, with diesel at 42 days. We looked at some average prices as well, some average prices within the same age band. Interestingly, plug-in hybrid has an average price, or did have an average price before it was sold, at £27,500, and that was at 39 months old. But BEV's much lower, £22,500, with a younger age of 32 months. So again, highlighting the value in some of those BEVs products over even plug-in hybrids. So petrol, I think, was at an average price of about £17,000, so it sits right within the sweet spot of where retailers want to be, but it's got a higher age, 20 months older than EVs at 52 months. So yeah, some interesting stats that we've got to come out. Probably too much to run through right now, unfortunately, but there's definitely some positives, and really some positives within BEVs as well, and how quickly they're selling within certain price ranges as well. One of the fastest selling drivetrain stroke fuel types is out there at the minute. So yeah, some real positives.
And I mean, as ever, we talk about what's happening in the marketplace and things like what's happening around the market. What's happening now, do you think, in terms of August? As we move into the month of August, what are you expecting now as we as we move through past this midpoint of the year into, third quarter, holiday season upon us, and some of the election and things like this now out of the way.
I think that buyer interest will, we're hoping it's going to remain the same. I think the market, is hoping it's going to remain similar to what it has been previously. I think, with the low supply into the market, we think that's going to keep the market strong. And as I said earlier, the usual sort of August into September movement is about 0.7. I don't see anything much different to that. If it lands at 0.7, I think there's still a phenomenally strong month, considering where the strength we've had this month and the previous month, and perhaps all year. With absentees from, I guess, retail forecourts and from buyers and from dealerships and what have you, I think there will be a slightly more muted, as it always is in the summer period, but I don't think it's going to fall off a cliff. And I think, the market is going to remain positive, and really stability is, we keep saying stability and steady and all the S words that we can probably think of. But it just feels it's just going to be pretty much more of the same. That would be our take on what we see as we currently see it.
Yeah, no, I think I wouldn't necessarily disagree. I think we are in that stable period now, aren't we? I think, even to your point you made on EVs, sort of highlighting that period of stability. And I think, as ever, it's great to talk to you through, the July's performance and get your view on, what's happening, for what you expect to happen in August. And for those listening, and as Jeremy alluded to there, and Curtis as well, there's a little bit more detail in terms of that retail marketplace. So as always, do have a look at the full editorial. We've just touched the surface on that today with Jeremy. So, we advise you to take a look at the full editorial there. You can find it on cap-hpi.com website, or just follow any of the editors' LinkedIn feeds with Darren and Chris Plum and Jeremy, yourself there, that will be shared when on your social feed.
Yeah.
So do check that out, and a lot more detail than what we've gone through today.
Yeah, unfortunately, there is a lot of detail, so apologies I couldn't go through it all now, given the time restriction. But hopefully it's a good read for everyone, and just goes into a bit more detail in terms of the things that we highlight, and just hopefully give a steer, and just I guess breathe some stability into the market, and more stability into the market in terms of what we view.
Well, many thanks for joining us on the pod, Jeremy. That's all for this special weekday Motor Trade Radio podcast. We're back with all the big car retailing headlines this weekend. Until then, is goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.